Welcome to KeyLadder. We're here today to discuss an introduction to the wave accounting system for residential rental property owners. This free accounting product that's available online will help you manage your properties, produce great reports that'll let you know what you're doing financially, if you're making money or not, where all of your expenses are going, and at the end of the year, your CPA can use the data by linking in and grabbing it to file your income tax returns. Our Wealth Builder program is designed to help individuals to acquire residential rental property, but more than that, it helps individuals make it a real business. Now, it could be a side gig for some people, but rather than commingle the funds with your own accounts, we like to separate those and make it a real business. It makes sense psychologically, and it helps you to build wealth down the road. So regardless of whether you are a wealth builder client of ours or not, you'll understand the necessity for having a good, accurate accounting system. And we're going to give you a preview of how this product works. This is the dashboard. Now, you will have already created your account and logged in. The process is so simple that I'm not going to spend the time to go through it. Basically, when you go to their website, you will select the choice of creating a new account. It will ask you for the name of your company, the type of business, and a few other questions, and then this will open up into the dashboard. Actually, they'll give you a few choices, and one of those choices is to connect, as you can see here, a bank account or credit card. That will be on the screen prior to this one, and then you can have a choice of making manual entries. Regardless, you will get to the dashboard, and you'll see the menu over here on the left. There's a launch pad, there's sales, purchases, accounting, banking, payroll. There are many things in here that most of you will not use. It's unlikely you'll use payroll, for example. You will use reports, wave advisors. You might be interested in that at some point down the road. But we're going to focus essentially on two different areas here. Over here on the left, there's accounting and then banking. So let's go into accounting. Now, I've already entered just a little bit of information into this already, into this sample company. So let's click on accounting over here. And what we want to do is go to chart of accounts. For those of you that don't know what this means, you'll see as I just click on it, it'll come up on the screen. And basically, every item, every classification for expense or income has a name. Let's talk about income, for example, and we'll call it rental income or lease income. It's up to you. Now, you can enter any type of income, for example, that you choose, the names of them, and we'll show you how to do that. Now, up at the top, for example, we have, in the chart of accounts, we have assets. I'll get back into what that means in a second. Liabilities, income, expenses, and equity. So let's go to income, for example. And this is already loaded with rental income, which means that you can use the drop-down box we'll show you later and select rental income when you're ready to record the rental income that you've earned. Sales is just a general thing that's in here. You can take it out or you can put it in. If you have other kinds of income other than rental, such as late fees, if you want to track those, or any other type of income, such as utilities, if you have an automated machine someplace like a laundromat or something, you can put that in there. We also have discount, other income, and uncategorized income. Everything falls into uncategorized income automatically if you don't flag it and say what it is. So we'll get into how that happens as well. So let's go into the, let's start back here with the assets. And we're going to talk about, I have set up a bank account. You have to do that, and I'll show you how to do that in a moment. Basically, it is just clicking here and adding an account. Now, you need to have a source where the income comes into, and that is the bank account. So I put in Bank of Big Bucks, and you can put in all kinds of information about it. I just simply type that in. As far as cash on hand, you'll need this one. Leave it in there. We'll talk about that perhaps later. Then you have money in transit you probably won't use. You've got inventory which you won't use, plant and equipment, depreciation and amortization you will use on your property. And you have short-term assets and long-term assets, and we will be using those as well when we set up the original property. For example, what we're going to do under a short-term, for example, long-term asset is, just for a second, just to show you how this is entered here. It says add an account. It's a long-term asset. So what we're going to do is we're going to put in building. Building on, say, 21st Street. That's your rental property. Maybe it's a duplex, for example. You can write down here, duplex. Okay? That's all you really need to do here. And you're going to be taking it US dollars. It's defaulted. So we're going to save that. Now, the purpose of the long-term asset is to put in the value of your property in there for depreciation purposes. I'm not going to get into how you load all of that. It takes a little bit of time to do the closing statement and load it all, but you need to do that at some point. So again, the bank is important. Liabilities, you could put a credit card in here. I don't recommend it. After you know how to use it a little bit more, you can. It gets a little complicated. Loan, line of credit, some of these things, you won't use most of these, but you will use a short-term liability. Now, what we're going to do is we're going to create an account for tenant deposits in short-term liability. And the reason for that is the money doesn't belong to you. It's a liability to you. So as long as you're holding it, you know you have to give it back. So when that deposit, for example, for $800 comes into your checking account, you flag it as tenant deposits, and then you can go in and you can record more information about who actually gave it to you. This way, you won't be recording it for tax purposes. It's simply sitting in there, and it doesn't mean anything to income. So you need that account in there. The other ones you don't need right now. You can get to them later on if you do. We've already covered the income. Now on the expense side, there are a number of expenses already preloaded in the system for you because it asks you early on what type of business you're in. And it does ask you, one of the things you can put in is real estate. Now there are a lot of things in here that you may not use even with real estate, but there are accounting fees. You'll pay your CPA at the end of the year. There's advertising and promotion when you advertise the property for rent, for example. Bank service charges, if you pay those. If you have internet at the house, might be an Airbnb, for example. So you have internet, you have hardware, you bought a computer for your own use for this. There's depreciation expenses I mentioned for the property, and that's where this will go as an expense. Dues, subscriptions, insurance. I'm not going to go through all of these things with you. You can obviously see that there's category. Now, if you need a new category for something different, all you have to do is click this and put the new category in there. That way you can record any kind of odd thing. Now, under equity, there's owner investment and there's drawings. You can really use either one. I prefer to use this one. So we're going to create an owner equity account, and we're going to put John Smith. That's you. Okay? Well, let's put Joan Smith. Make sure that we get everybody covered here. And what that means is that any money you put in this account to start with will be part of your owner contribution. In fact, any income or any deposits that you make into this account that are not strictly income deposits would go into your contribution. So you might want to fund your business before, start your checking account and fund this before you buy the property, and perhaps you have a $40,000 down payment. Drop it in here and it'll go to this account to start with as an equity account before it's used for something else. And if it goes into the equity account, again, it's not taxed. So this is the basic chart of accounts that you're going to be using. Now, after setting up the chart of accounts, you should go over, or I recommend this, to banking. You go to banking and you click on connected accounts here. And this offers you the opportunity for the system to download from your bank periodically. Now, it doesn't happen every day, but periodically, the transactions that take place in your account. So you can see they have a few of them here, Chase and American Express, etc. And if it's not there, you can put it in here, and they will, you put in your password and username, that type of thing, and it will connect to your bank, and it will immediately download any transactions for the period that you've chosen. You can tell it how far back you want it to go, to the beginning or to some date, and it will download those transactions for you. So I haven't done that for this because it's a sample program, but if you downloaded those transactions, then what you would do is go into accounting. That's our next step here after you've set up your bank. And then we are going to go into transactions, which is where you're going to spend most of your time in this accounting system. And this is very slow, so excuse me. So this is the transactions. Now, I manually entered what you see in front of you. This would be, for example, a typical rental transactions for a single month. So I put in for January 3rd that there was a water company payment for $70. And what do I see here? It says cash on hand. It is a mistake. What we're going to do is click on it, and then over here where it says water company, we're going to change this to the Bank of Big Bucks, because that was actually paid out of that bank account. What happens is the system defaults to cash for a while until you get enough in there. I don't know how many transactions it takes, and then pretty much it starts defaulting to your checking account. That means that's where the money was coming from. So we're going to save this here. And now it says water company, and all of these transactions took place with the checking account. So this is a mortgage payment that you made, for example. So let's go in here and take a look at this mortgage payment. Now, you'll see down here, first it says withdrawal. You can change that if you want, put in the amount, the date. It's important to get that correct to match up with the transaction date in your checking account. So when you go back through to correct these or to check them off, they all match. Then you can select, this is where we select what we want. This is the chart of accounts, essentially. Here's all the expense accounts, here's all the others here, and you just click on it. So these are some that you've entered and some that were already there for you. And so I had already previously clicked on interest expense. Now here is where you can put notes, lots of notes, and I strongly suggest that you use notes. It's not necessary on the mortgage. That's really easy to understand. So you could put something in there if you want to, but again, it's really not necessary. Now, let me explain something about the mortgage that's different from most other things. Your mortgage payment, if you have an escrow account, includes principal, interest, taxes, and insurance. You need to break out all of those things to accurately record what you're paying here. So what you do is you click on this here, which is split a withdrawal. So what we're going to do is I flagged that as interest expense just to get it in here. Now when it comes in from your bank account, it will say uncategorized expense, because that's what everything says when it comes in from the bank account. Until the system starts to guess at what it might be, and sometimes it's right and sometimes it's not, but that's something you can change on your own. So I'm going to go down here on uncategorized expense, and I'm going to say that of the $800, let's say that the taxes were, let's find property taxes here, right here, okay? Let's say that property taxes were $400, okay? Now, this tells you there's something wrong with this picture, because you know you've got $800 here and you're trying to split it out. That means it's expecting another $400 to total. So what you do is go right back up here and change this to 400, and now it totals the amount that you originally put in there. So if you save this, for example, there you go, interest and taxes. Now there's a couple of other categories, as I mentioned to you. So when you go in to split this transaction, you should have done all of it at one time. Let's go down and find the, we didn't put in well, we did put in the property here. So we're going to put in right here, asset account. Now this is where you'd put in the equity portion of your payment. Let's say it's $100. So let's say, let's adjust this up here to $300. Remember, it's got a balance, okay? Now you can read this from your statement to get it right. I'm just playing with some numbers right here just to tell you what happens. So when you save this, even though it was a single payment of $800, all of those payments and the portions of that go where they belong to give you a proper accounting. So now we're into, say, the tenant. Tenant B provides you with rental income. We just selected rental income from the chart of accounts, and we put in the amount right here. And now this is where you can say that tenant is paying last payment before agreement expires, for example. So, something, anything like that, whatever you want to do for notes. So this is what you do for the month. Now, what would happen with your bank account is all these activities would come in here, and they would all come in as uncategorized right here in this section. You have to go and just click and say what it is. If it's something really simple, it may actually say the water company on it. Depends on what you put in, what comes in from the companies themselves. You may not even have to click on this over right here to come over here. Maybe all you have to do is go over here and flag it correctly, and then you're good. But when you want to have more explanation, particularly for an expense such as a maintenance repair or something else, you may want to put in the notes. It was paid for on credit card so-and-so. Something that tells you where to go for the receipt in case the IRS decides to audit you. So now let's go down to reports. And under reports, we have profit loss, we have the balance sheet, we have the cash flow. We have a lot of other things down here too you can check on. But right now we're going to look at the profit and loss statement. And this will bring you to the 2020 year. You can select other years too, of course. You can select quarters if you want to, or you can select a period up here, and then you update the report. So basically, for this month, for January, so far, we are up $1,079 in net profit. So these are the major categories here. Okay, there's no cost of goods sold, but it shows up anyway. There's your operating expenses here. And then what we're going to do is click on detail, and the detail gives us what we saw in the transaction area. It tells us specifically where those costs are going to. So you have 770, and that is utilities, you have taxes that you paid, and you had interest. Now, what's not showing on here, of course, is the equity payment. Now, that's why we're going to go back into reports over here, and we're going to select balance sheet. Notice on the balance sheet we have $979 total cash in the bank. Let's take a look at where that is. Okay, that is in the bank, and we also have equity of $1,079, which happens to be the profit, okay, in your account. So you can go in and look at your equity account. Or for example, here, so we put $100 in long-term assets, which is a positive. That's the equity that you accrued. And again, this is what we have in our bank account here. So you have the balance sheet and the profit and loss. Those are the two reports you're going to use more often. You can also use income by customer. All of the data is in there already, so it pulls all of this up. Now, there's one more thing that you can do, and I'm not going to get into it very much here because this is just an introduction. You can offer the opportunity to your tenants to pay you by credit card by going into sales and issuing an invoice to your tenant. You can do this on an automatic basis where they get one, for example, on the 25th of every month, which reminds them to pay you. So if you create an invoice here, right up here, and it gets emailed to them directly when you push the button to send it, it offers them the opportunity, once you've set yourself up, to pay using the Stripe, STRIPE system, with a credit card. Now, keep in mind that that will cost you about 2.9% roughly. So if they do pay by credit card, you want them to compensate you for that. So be sure to tell them that anytime they use that opportunity, that they should add that, say, 3% to that for you. But that's a good convenience for people that are coming close to the date and don't have the cash. And it's kind of a great thing. And that, frankly, is how this company makes its money, by working with you on payroll and working with you on those payments. And you might even use some of their accounting people from time to time. So this is the introduction to the Wave accounting system. You can access that by going to waveapps.com, W-A-V-E apps.com. And if you're interested in the KeyLadder program, please contact us. Our website is KeyLadder.com. Please take a look at our website and use it to make contact if you're interested in any of the programs that we have, particularly our Wealth Builder program. Thank you for listening.